So all the charts here, except for the chart in the upper left corner, which is a daily chart of the U.S. dollar index. So if you take a look at that chart first, yeah, Edward, actually, that's exactly what we're going to start with. So if you look at the, let's start with I'm going to start out with the live markets. Then I want to go into a little kind of lesson based on today's topic, and then we'll come back to the live markets. So that's the plan for the session. There were some good moves this morning. Everybody, hopefully you caught that euro, but we'll take a look at that. Anyway, so if you look at the chart of the daily chart in the upper left corner, we've got the dollar declining, right, with the equity index markets rallying quite a bit over the past couple days as the dollar declines. But notice the dollar coming into a daily demand level here. A couple things on this. First of all, yes, price has been back here a little bit, but barely touched the level here. Couldn't even make it to the level here. So that's a pretty good sign for this level. That's the positive side to the level. So watch for that. So when the dollar trading below 82, there's chance for a reversal to the upside. Now, so what do we do, if and when that happens? Well, we look at currencies, obviously, against the dollar for the opposite play, all right? If we come to a daily chart of the yen, what's interesting is we have this little kind of, sort of like a gap here, right? Correct, Nico. So take a look, though. I want to scroll all the way back in the yen. We go pretty far back here, dollar yen, and we're looking at the spot, by the way. And we're nearing this level back from way back. Okay, back from 2009. Notice up in here, coming right out of a pivot high, we have a little bit of basing, and then a strong drop in price on the daily chart. Price actually did not come back to that level at all. So we would call that a fresh level. Fresh level of supply in the dollar yen. Notice the bottom line is snug up against the candle body here, placing the level, right where the origin of that decline was. That's typically where the orders are, the sell orders, and then our top line right at the highest price in the base, with a protected buy stop above that level if you're interested in taking that opportunity. So that is sitting. I can actually put a horizontal line in here for you. All right, so there's your prices. That's the price, the bottom line there. Okay. So you may want to pop that on your daily chart and just keep track of that one. We're getting close, right? We got pretty close. Nico, I would definitely consider it a fresh level, yeah. Okay. So we see price has not got there yet. It looks like it's going for it. Now, what makes it really nice is look at how price is approaching that level. Okay. This is what we want to see. This little bit of basing right before it, not great, but not the end of the world. The fact that we have this below, pretty good sign. So yen coming into a supply level here, dollar coming into some demand potentially. Again, are we saying this, huge rally in the yen is completely over? No, but this is the first time where there's risk to a significant drop in the yen. Make sense? Yeah, if we go down to a smaller time frame, Nico, I think you'll see that one's not really that big of a deal. Let me do that here. So can you see here, like on the 45-minute chart or even the 10-minute chart? Yeah, I don't know about free fall, but there's not a lot of significant demand in here. You're going to have something right around 97, but even that's not a big deal. So that's a big picture opportunity. We're dealing with fresh levels today. That's kind of the theme of the session. If you saw the title of the session, I believe it was how to identify fresh levels. So we've got two fresh levels, one in the dollar, one in the yen, both opposing supply and demand levels in the larger time frame. Keep an eye on that. So I want to take you over to, we'll come back to the live markets in just a little bit. Let me take you over here first. All right. Now, did we look at this graphic last time? I'm not sure if we did or not. Something tells me we did, but I've got a few after this. Maybe we didn't. We did. Okay, good. Good. Yeah, I can remember going over this. So just a little refresher again. We just remember with this, every time price comes down, any time price comes down into a level, or into one of these kind of stacks of orders, which is a level on a chart, remember, it's not fresh anymore. So what we want to do is on the chart, be able to figure out where these unfilled buy and sell orders are. Remember, the higher price goes in a market, the closer you are to supply. The lower price goes in a market, the closer you are to demand. Right? And as I said before, for people that weren't with us last time, Boyke, yeah, I believe, actually it was longer than 2 years. I believe it was 2009, so, okay. So remember, when we look at a chart, this is why most people, just lose money trading. Lose. Why most people lose is because in order to, no, Boyke, we're not suggesting there's still the same order sitting there. We are suggesting that the chart is doing a great job of telling us where that supply and demand is. I wouldn't call it the same supply and demand, no. Yeah. Good question, though. Good question. So remember, here's a demand level. This is a trade took a little ways back, right? First pull back into the level. Buying when the level is fresh. Buying where the buy orders are. Again, why most people lose money trading is because if you think of all the conventional buy signals, right? Good news, higher highs and higher lows, an upsloping moving average. I could just go on and on and on. But most buy signals are going to come after prices going higher, okay. Which means most people end up buying where the sell orders are and selling where the buy orders are. That's what retail traders do. Okay. Yeah, Luke, it all comes down to identifying fresh levels. Okay. It's not often that a fresh level doesn't work. So the key is finding, a lot of times when people think is a supply and demand level, it's completely not. Right? Supply and demand, support, resistance. So I think I showed you this one last time. Yeah, so very important. Just remember that one. That's a good one. So again, identifying a fresh supply or demand level. That's the topic today. I want to get a little deeper into that, and then we'll go back to the live markets. So here's another trade. Again, notice, right? The base, the rally. We get in on the first pullback in price. Prior to the first pullback in price, this level is fresh. So we want to be a buyer that first time price comes into the level. Well, you'll notice most of the time is if you're picking fresh levels, your biggest problem is not going to be price going through the level. Your biggest problem is price, sometimes is not going to get to the level. It'll almost get to the level. Does anybody have that problem where right now your biggest problem is you're pretty good at picking levels, but price just doesn't get to your level, almost gets to your level and turns before it goes? Right? So look at all the people typing in, yes, all the time. Missing by a few pips. Right. So you folks that are typing in now are very good at identifying, you got the fresh level thing down. The reason why you're not getting filled sometimes is because now you're putting your order where banks and institutions are buying and selling too, so you're competing with them for those orders. So what we want to do with that is, what I'll do with that is get in just a little bit before the level, and just sometimes, reduce the position size a little bit, just so we keep our risk in line. Okay? Yeah, there you go, Seth. Is that working out for you? Get in a few pips early? It should. All right, great, wonderful. So, again, fresh levels here. Let's keep going. I want to show you, this is a good one. So here is, so this is the supply-demand grid. Don't worry about, I'm not here to give you information on the grid. Don't worry about, not a big deal. But these are levels we put out every day, right? So just looking back a little bit, we keep track of them every day, but take a look. So the yellow shaded areas are these supply levels from the grid last month, and but notice the levels, all of them. Let's start with the gold one on the right. So notice, let's start from the bottom of the chart. When price is down here, okay. When price is down here, you may look at that as a supply level or at that as a supply level. A lot of people would call this resistance right here where I'm pointing. We would not. Remember, this is just a pivot high. There's a lot of trading to the left of this. Okay. That's a good idea, Seth. Yeah, I do that sometimes. Not down to the 1 minute, but yeah, it's a great idea. Now I'm going to have to, though, because you're doing it. So now you've got me beat. No, I'm just kidding. But it's a great idea. Anyway, so this is just a pivot high, meaning there really can't be any significant sell order sitting in this price level because price has been here so many times and it's sitting here. Okay. And, right, here is the picture that represents a supply level. So this is the first time price goes back to the level. That's when it's fresh. Okay. So identifying the right level is one thing. Making sure you get in on the first pullback, you know, that's the key. That's a key odds enhancer that helps absolutely stack the odds in your favor. Notice the NASDAQ over here on the left. This pivot high right here, that's not a supply level. Okay. This pivot high right here, that's not a supply level. You got to pick the right supply level. Make sure it's fresh. When I say fresh again, I mean no pullbacks. There have been no pullbacks to the level. Here's another one. Okay. That's not a... I'm going to find one. I guess this one will work. Hang on. I just want to find a... There's one I was looking for you. Yeah, so for this one, for example, once price moves away from this level, so see this little level right here? Compare this one to the one below it. This one below it is not a fresh demand level. However, this one was prior to this pullback. Okay. This was not a fresh demand level because you already had, price was already here to the left. In other words, you already had a move down into that area. Then you had another move down into that area. And here, price spent, some time. Okay? Meaning if there were unfilled buy orders down here, a lot of them are probably already filled. So once this happens here, Jake, yeah, the others can be, but you have to make sure you look to the left. That's the key. Either of them can be. You just have to make sure you look to the left. Yeah, I see someone asking about wicks. Don't worry about the wicks. What I'm saying is, depending on the time frame you choose to look at, a candle's going to have wicks, or if you change the time frame, it might not have wicks. So don't make wicks, the big deciding factor. How it leaves the level is not going to determine whether it's fresh. However, notice when prices leave this level. Okay. For us to even call this a demand level, I want to make sure that this rally away from the level, the distance this goes, is at least, for me, 2 or 3 times the size of this level. So, for example, this is the Russell. So this is about, let's just say it's a point. It's not a full point, but let's say it's a point. I want to see this rally away at least 3 times that. Okay, I want to see price rally away at least 3 times that, and then take the first pullback in price to that level, buy it there, because the level is fresh. The level has a decent initial risk-reward opportunity or profit zone. Make sense? Okay. So when price comes back to here for this one, when price comes back to here for this one, I'm very confident that we're going to go up to at least here, which it does. But I know that the only thing stopping it after that is this. Make sense? So for me, the odds with this one are very high because of the demand level itself with all the associated odds enhancers. The profit zone is fine. It's not great. The initial profit zone is not great. It's 2 or 3 to 1, but that's okay. And then the ultimate profit zone is quite a bit more. Make sense? So on this type of trade right here, and again, I'm speaking from about 21 years of experience, but this trade right here, my biggest fear on this one is not stopping out for a loss. I'm okay with that. My biggest fear or challenge here is that it's a good opportunity. I might not get filled. So this is one of those cases where I might jump in just a touch before. Okay. FT, no. No. I'm a big fan of when you put your trade on and you have your risk in place and your targets. I don't ever change anything. I shouldn't say ever, but I can't remember. I hardly ever, and I can't remember the last time I changed something after, change a stop or a target after entry. I don't move my stop loss to break even. If you're going for multiple targets, I suppose you can, but I'm a big fan of just kind of leaving it in and letting it go. Okay. One of two things is going to happen. Or one of three things. I'm either not going to get filled, or I'm going to get filled and lose money, or I'm going to hit the targets and make 2, 3, 4, 5, 6, 7, 8, 9 times what I was risking, depending on the trade. Okay? And all three of those scenarios, I'm okay with. And I know, you hear a lot of people say, should you move your stop and all about the stop. When do you move your stop to break even? When do you move your stop up? Things like that. Again, I know it sounds very safe to do that, but I would be very careful doing it. I would not do that until you have enough data that you can look at where the data says that's the right thing to do. Because I bet if you did that, I think my guess is what you're going to find, because I've seen this for years, is that if you're constantly moving your stop to break even or just kind of trail stopping, I bet if you look back and you just eliminated the trail stop or moving the stop and you just stuck with your targets, I bet your numbers would be much better in the end if you went back and looked at the data. Okay. Okay. Well, that's because FT. That's because I bet a lot of the ones that I bet a lot of times you got knocked. You would have got knocked. I bet a lot of times you got knocked out, break even, or knocked out on a trail stop. Those ones in the past actually, I bet a bunch of those would have went to your target. And even if a small percentage of those went to your target, your numbers are still going to be better. You know what I mean? Again, I don't want to get too hung up on this conversation, but I'm just trying to. Yeah. And again, when people are new to trading, that's typically what they do, but again, let me give you a scenario, right, that I've seen before. If you are trading, a trader on a hedge fund, right, and, maybe you're kind of new, what have you, or whatever, and you see an opportunity in the market, okay? You see an opportunity in the market, and you go into your boss's office, the head trader's office. You know what? I see this opportunity. I want to risk, I don't know, $1 million to make, $5 million on this trade, right? And I've seen this scenario. And you go over your logic and the rules for it. He looks at it. You feel confident about it. He says, do it. So you go place the trade on, and all of a sudden it meets entry, and now it's going in your favor, right? It's going in your favor, you're up a couple million, now maybe you're up $3 million, it's getting, it's nearing your target, maybe $3.5 million, all of a sudden it starts to turn around. Now you're only up $3 million, now you're up 2.5, now you're up 2, now maybe it bounces a little higher, you're up to 3 million, but now you've lost confidence in the trade. And you think to yourself, you know what? I'm up $3 million in this trade. This is going to be my biggest trade for the firm. I should just take profits here and bring that, winning trade into my boss's office. He's gonna get up and give me a big hug and I'm gonna get a nice bonus, right? So you talk yourself into it, you go do that, you walk in your boss's office, you show him the trade, you know what he's gonna do? He's gonna fire you on the spot. He's gonna fire you because he's gonna say, wait a second. He says, you told me that you were risking $1 million to make 5. You just risked $1 million and made 3. You completely broke your rules. Goodbye. Okay, I've seen that. And anyway. All right. Anyway. Yeah, and James, I see your point there. Conventional wisdom says that exits are more important than entries. I think you have to be a little careful with that. I place them equal. But I think the reason why you see that, and why conventional wisdom looks at that, is actually because people get their entries wrong. Okay. All right, let's keep going here. I just want to go over... Yeah, so notice with these, we're picking the levels. I'm just going day by day here. Notice we're picking the levels where price has not come back yet. And the first pullback in price are the entry points. Okay. Right. There's a level, very little trading, strong drop away from the level. Price goes way more than 3 times the size of the level. The entry is on the first pullback in price into the level. Okay. Yes, Sasso, exactly. Okay. Yeah. Okay. Remember, don't try, again, just a little tip for new traders. Once you get the levels down, and it looks like a number of you have the levels pretty good, and you're taking your trades, whatever, and maybe we can add in a little buffer so you get in a little bit before, so you get some more entries. Okay. One of the things you have to be very careful with is cutting out losses. Don't try to become a trader who's right 100% of the time or 90% of the time. Be very careful with that, because what you're going to find is some of the things you're going to do are novice decisions that will also take you out of a lot of winning trades and a lot of big winners. That's where you're going to make your money, right? So be careful focusing too much on cutting out losses. If you're above 50%, right, win-loss, even if you're at 50% win-loss, be careful cutting out losses too much, right? We can make that work. Skynet, that was the plan this morning with the euro scaling in and out. Sometimes, yes. All right, so let's move on here. This is inside this level. I really had to scrunch this chart. There was a supply level there, but notice this pullback here. Price almost goes to the level, but doesn't. So that means it's still a fresh level. Here, price barely touched the level in turn. So that was the first pullback into what was a fresh level. This was a little drop-based drop coming out of a pivot high. Remember, this level is not the pivot high itself. Okay. Yeah, we're going to go back to the live markets in a minute. We always spend so much time on the live markets. I feel bad that we're not, spending time on the lessons. So, well, yeah, we'll go back to, and I like these too because these are not perfect examples; they're real examples. Okay, here's another one. Notice supply, price comes down, but look, price barely comes back to the level right here, but doesn't touch it. Right? Barely. And then falls away again. What I like in that scenario is then shorting a new high into the level. Okay. Because if you look to the left here, there's no fresh demand here. So, what's important for entries is identifying fresh levels, but it's equally important for the exits to identify fresh levels. Does that make sense? I think we'll go to the live markets. I don't have... here's one more good example. Let's look over here at the DAX. So here was the buy for this trade, right? Demand, price rallies far enough away, price comes back, entry is met. Now, after this entry for this trade, this was not a fresh level anymore. Okay. So when price came back this time, I would not buy that. Now, the trade works out great and price takes off, but I would not buy that. I think you're going to find that a lot of the time, after this pullback that's this deep, price will go, through the level. And if you have the ability to identify fresh supply and demand levels, why would you really want to look for anything else? That's kind of the point. Okay. All right. Yeah, I see some people want the lesson, some people want the live markets. One thing I've learned, as hard as you try, you're never going to make everybody happy all the time. But I do try. So, yeah, let's definitely go to the live markets. Okay. It's always a balance between kind of new people and veterans. I totally get it. So the attractive thing on this dollar yen is the fact that we kind of have a whole lot of nothing sitting below. We've got this level sitting up here. Dollar also nearing some demand. Okay. All right, let's go to I guess we'll go to the euro. Swiss, yeah, we could start with the Swiss. No problem. Vlad, you want the Swiss? Let's start with the Swiss. Wait for the rest of the charts to come up. Okay, so what we always want to do is start with the big picture, which on the weekly here, there's not a whole lot to look at. Okay. When I glance at the daily, that's giving us some information. Right, so price is falling, and it looks like we've got a couple pockets of demand down here. However, this kind of little tiny cluster of activity tells me to go look at the 240-minute chart. So let's do that. I want to blow this chart up. Okay. So this is a pretty big time frame here. When we look at this, I'm not going to spend much time here. There's not a whole lot to look at on this time frame. Yes, price is kind of sitting here with this demand here, but the fact that you have this big pivot low in the middle of this big base, first of all, we would not call this a demand level here for two reasons. Number one, way too much trading activity here. The logic is, right, at price levels where supply and demand is very much out of balance, you're not going to get lots of trading activity. You're going to get very little trading activity. Right? So way too much trading activity there. Number two, if there was so much demand in this base, price never would have come down to here. So completely, I wouldn't even remotely call that a supply level. Let's go down to a 60-minute chart. Or this one. Let's go right here. So above current price, we don't have a whole lot right here. Let's go below current price. Now we see why we have this pivot low here. Okay. Notice this pivot low was right into this. Okay. So this one, this level right here, yes, level on top of level. This level right here was great, but it's not fresh anymore. So now we ignore it. Okay. However, if you look, sitting right below that is this little level right here. Let's put our lines in. We can blow the chart up actually. So let's get our lines right. Focus right there on the origin of the rally. There we go. Now when I blow this up and really take a good look at it, I see price barely came back to the level. Okay. Turn at this top one, but price really didn't come down to this one if we get our lines right. You follow me? Okay, so this is a pullback into that. This did not make it down to there. Now when I scroll right, you're going to see that we have not been back to that area. See that? So that would be our fresh demand level, at least our first fresh demand level below current price. Put our sell stop just below it, and off we go. Let me just get some prices here. So let's get about 92.20. I'd go 92.18 on the stop. Yeah, so you really want to find the origin of that rally, which is really down in here. The origin of the rally is really like right there. But the reason I would probably get in a little bit before that is because, you're going to have a tough time getting filled down there. Now remember, this is a spot, exactly, competition, exactly. So remember, this is a spot market, so if and when price comes down there, price is drifting lower now. So if and when price comes down to that level, right there it is. If and when price comes down here, what's likely to happen to the spread down here? What's likely to happen to the spread down there? Is this likely to get wide or narrow? Right, it's likely to get wide, exactly. Increase. Is that a good sign or a bad sign? It's good. Okay? Right? So the market maker or broker or whatever you want to call them, okay, will scare you out of the trade by widening the spread. That's not why they're doing it. They're doing it because, there's obviously demand there in buy orders. So if you're going to buy there, you're forcing them to sell. So they've got to bake in their profit first. Right? So that's an odds enhancer is specific to Forex. So if price trades into a fresh level and the spread gets wide, that's an odds enhancer. It's probably a good trade. But if price comes down there and the spread really doesn't widen out too much, okay, that's a sign that, maybe you haven't picked a good level. Make sense? So the visual picture, will actually, it's going to paint the opposite picture of what you want to see, but that's not a bad thing. That's a good thing. What if the spread is fixed? Good question. Is a spread ever really fixed? I guess a better way to say that is a fixed spread really a fixed spread? But that's not a topic. Not a topic for this session. Anyway, there's a nice little level down there in the Swiss. So keep an eye out for that one. I saw some people want to go to the Aussie. We can do that. Yeah, and always remember too, like I've said before, we are looking at the spot market now. If you find any short-term trading opportunities, it's probably better to take those in the futures versus the spot. So when we look at the big time frame, we see we're back up into all these pivot highs up here. So not that excited about that. What we want to do is look above those pivot highs or inside those pivot highs. So let's do that on the 240-minute chart. I don't think the daily is going to help us out with that at all. It's not. Well, hang on a second. No. Right? We're just into these pivot highs, which tells us that price has been there before, meaning each time price comes back to that area, some of the supply or sell orders are being filled. There's not as many left. Let's go to the 240-minute chart. What I'm going to do is I'm just going to put a horizontal line on top of the pivot high there and scroll left just as a marker. Now I'm going to move it up because I'm just going to keep moving it up until we reach a fresh supply level. I'm going to need some more data here, I think. bit more. Okay, so let's scroll. You know, this level's going to be kind of a little too high up, but let me do this. We will find it. It's there. It's always there. Okay. So I'm going to scroll right. So we'd be, now I'm still on a very big time frame, but if you look above all this, again, I'm not going to spend too much time here because we're not close to this, but anything above, you know, you want to look on your 60-minute chart up in here. This is where if you're looking for kind of big swing type trades, you're going to find your supply levels up here. Your next significant turning points will come from up here. Okay, makes sense? So look for that. Again, if we were close to that, I'd spend time on it now, but we're not. So, and then as far as demand, you know, we've got a little level just below. I know this may seem a little high on the curve, but remember, the supply-demand curve is likely to, the big picture supply-demand curve is likely to change because we've been up to that supply so many times, right? Well, I would say it is changed already because that's not fresh supply we're hitting right now anymore. So we've got some demand there. There's more lower, but this is your nearest area. So it's about 104.90 is where it comes in. And you can find this level on your 180-minute chart. So as you can see, for those that are new, you know, sometimes you have to scroll back quite far to find your level, like we did in the dollar-yen. Sometimes you don't. Sometimes it's from the prior day. But the whole point of this session is just keep scrolling up and left and down and left without cutting through candles to find your fresh supply and demand levels, and that is the key to high probability trading. Okay, and again, once you do that and you become consistent, what happens most of the time is your biggest issue is not losing. Your biggest issue is not getting filled. All right, as long as you're managing your risk right, the losses should not be a big deal. No, I don't think you need to use stochastics, Pan. That's just that's a lagging tool, right? So if we use any lagging tools. If we add any lagging tools to our decision-making process, all we're doing is increasing risk and decreasing reward. That's why, so many, believe it or not, I know it may sound crazy, but so many people use moving averages. And they don't want to buy unless price is above an upsloping moving average, and they don't want to sell. They don't want to sell unless price is below a downsloping moving average. So what is that really saying? Someone who does that means their strategy is always to buy above average prices and sell below average prices. Okay. And there is no way to make that a winning strategy. That's why banks and institutions make so much money, retail traders and investors lose. Okay, the pound is great because there's some good levels in the pound here. Good question, Jonathan, about stops. If you're kind of swing to, if you're into trades that are, bigger picture moves on larger time frames, I think you're fine in the spot market, and you still probably don't need to put your stop more than 5 to 10 pips at most beyond the level. If you're short-term trading, I'd be very careful doing it in the spot market. I would just make sure your stop is, well on the other side of the level or or just trade the futures and you keep it nice and tight. Okay. So obviously on the weekly we've got a great level up here. We're nowhere near that at the moment. Let's go down to this time frame right here. What we want to do is, you see how the pound is rallying? We want to look inside these two big red candles here. When we do, on the daily, for example, we come into an area right here that's very interesting. We want to take an X-ray snapshot of that on the 180-minute chart. Scrunch this guy up here. Okay. Looks all right. I think I'm gonna go for this one right here. All right. So we've got this area in here. When you look at it on just this area right here, you can really combine these two. But we're gonna go look at this on a smaller time frame. Yeah, we'll take a look on the 4-hour first, and okay, just that general area up there is the area of interest. So now let's go. Actually, let me take a quick peek on this chart, real quick one. Whoops. I just want to check that out. Okay, got it. And let's look on the 4-hour. What we're doing now is just kind of taking X-ray snapshots of this level to investigate. Make sure we're good. Make sure it's still fresh. That's kind of the primary reason for that. Yeah, we do have some demand below that we need to watch for, so I see that. Okay. You know, the level we would actually be interested in is this little guy right here. The problem with this one is there's demand too close. Like I'd rather try to play that yen than this one. You see the difference in the profit zone and the opportunity between this and the yen? Now having said that, yes, so now we've got a little demand below, but I wouldn't really worry about that. I'd worry more about this little level down here than I would that circled area. Well, even that's not good. You know, if prices turn up here, there is some demand here, of course, but so much trading in here, this doesn't look like anything exciting. Like this, typically price is not going to come back to this and scream higher. More often than not, you're going to see price go through this. Of course, I would much rather time a short in the pound to the dollar, being at or near that demand level. So make sure we time it with that. Okay. There's that. For those that don't have it, I haven't typed my email address in a while, but there's my email address. If you need it, sseiden@tradingacademy.com. You can always send me an email if you have questions or comments. I see we're out of time here, so hopefully the session was helpful. The focus was on fresh levels, meaning a level that has not had a pullback since it formed. But of course, again, make sure you know how to identify a supply or demand level first of all, and then make sure it's fresh. All right, have a great day, everybody. Thanks again, and thanks to FX Street for putting these on, and we'll see you next time. Have a great day, everybody. And if you're taking trades, and if they're working, not working, it'd be great for you to send them. If you're doing well at this, send an email too. It'd be great to see. Thanks a lot. Have a great day, everybody.